Good afternoon, and thank you for joining us today. I'm sorry we're just a teensy bit late. We had an odd noise happening on the line, and I wanted to make sure we got that cleared up before we got started. My name is Anna Mulder. I'm the marketing manager here at Basic, and I have the pleasure of having Stephanie Grant present for us again today. We scheduled this a long time ago, and I'm glad that we're still able to make this date work for us. COBRA hasn't changed drastically, but employers always have questions about it. And it's such a big regulation that it's not one that you want to mess with. So I'm really happy that Stephanie's going to be able to cover the regulations, some of the compliance, some of the common mistakes that employers make, and hopefully you walk away today with a little information that you didn't have before. If you haven't been to one of our webinars before, we offer two different kinds at Basic. Today's webinar is an educational one. It offers HRCE credits. I'll put in the certificate for the CE credits partway through the webinar. I'll also be sending an email tomorrow that will include the certificate, the slides that Stephanie's using today, and a link to the recording for today's presentation. You should have received the slides in an email earlier this afternoon. If for some reason you didn't get that and you want them right now to follow along, they are located in the handout section of the Go-To webinar side panel as a PDF. So you can download that if you want to take notes. Otherwise, I will email it again tomorrow, as I mentioned earlier. So for those of you that don't know Basic, we are a nationwide TPA. We started 30 years ago. This is our 30th anniversary. We started, the headquarters are in Portage, Michigan. And since our inception, we have grown and added administration offices across the United States. We now have an office in Grand Rapids, Michigan, in California, Missouri, Arizona, Ohio, and Rhode Island. Depending upon what our clients' needs are, we place it in the different administration offices. They all have just a little bit of a different flair depending upon what your needs are. So we really base where the administration is on what you guys are looking for. The next slide just shows a real quick visual representation of the services Basic offers. Obviously, we offer COBRA. That's what we're covering today. But in that HR benefits section, we also do FSAs, HRAs, and HSAs. FSAs is really where we got started, but as new things came onto the market and as our clients' needs changed, we started offering other services. So HRAs, we were really one of the first TPAs to offer HRAs, and HSAs was really big when I came into Basic about 14, 15 years ago. We also offer parking and transit. We have a very unique wired commute service for those employers that want to offer that as a benefit, or also those that are required to based on the city or state that they employ employees. The next section is payroll and leave management. This is an area of our business that has been growing steadily over the years. FMLA and absence management is something that employers are really finding that they need some expertise on a regular basis. The handling HR day in and day out and being able to manage FMLA effectively just isn't working for them. We also offer payroll, HCM, timekeeping, and time clocks. Those are all administered out of our Grand Rapids, Michigan office, but we do offer the services nationwide to clients. The last one, compliance and technology. This one is a division that is relatively new to us. ACA Elevate is our ACA filing services. As soon as that requirement came on board, we really started building our compliance division. We already offered ERISA Essentials, but the ACA filing really made it apparent that compliance and technology was a need for our clients. ERISA Essentials offers employers with help with all the ERISA regulations. We just did a webinar recently on that, and I'll send you guys a link to the entire webinar recording library. If you didn't catch that one, I would. It goes all into SPDs, 5500, SMMs, the whole alphabet soup of ERISA. I'm going to keep myself muted for most of the time. That way Stephanie doesn't have any distractions. You guys are also muted, so you don't need to worry about that. With the hundreds of people that are on the line, that's really just the best way to run the webinar. But you are able to ask questions. There's a question panel that you can open up and type in a question. I'll be watching those as Stephanie presents. If you have any technical problems or anything like that, you can use that as well. If you're looking for something, I might be able to point you in the right direction as well. But if you have a question, I'll be watching those as we go and kind of flagging them as we go, especially if I see a couple that are similar in nature. It kind of means that maybe something didn't click exactly, and we might want to go over that. I probably will not be picking questions that are super specific. So if it's a really specific situation that only applies to your business or something like that, we're not going to pick that kind because we really want the question and answer period to benefit everybody as a whole. And those really specific situations usually require some additional questions and some follow-up questions, things like that. Stephanie is not a basic employee. She is an attorney that works in Kalamazoo. Is it Kalamazoo, Stephanie?
Southfield.
Grand Rapids. Southfield. Oh, thank you.
Southfield.
I didn't get it right on either of my first try. Sorry about that. So she has offered to do this webinar for us, and her contact information is included in the slide deck. But we didn't contract with Stephanie for follow-up questions. We're going to do as many as possible, but to kind of keep the cost down and to be able to offer the webinars free as many times a year as we do. If you're looking for some follow-up questions, if you're a COBRA client, obviously call BASIC and talk to one of your the account managers. But if you want to contract with Stephanie separately, you're welcome to do that. I just kind of wanted to give you guys a heads up that we only do the Q&A during the actual live webinar presentation. All right, Stephanie, that was a little long-winded. Sorry about that. I'm going to go ahead and mute myself and let you get started.
Yeah, thank you, Anna. Again, my name is Stephanie Grant. I work out of Warner, Norcross, and Judd in the Southfield, Michigan office. And for anyone that's not in Michigan, Southfield is a suburb right around the Detroit area. I specialize in employee benefit law with a focus on health and welfare plans. So COBRA is right up my alley, and I get a lot of questions about it, and always am willing and happy to work with BASIC to present this webinar on COBRA. And as Anna said, we're going to try to get as many questions as we can during the webinar, but please feel free to call me or email me afterward if you have a specific question about a scenario. I'm more than happy to answer them. As I told Anna, usually 99% of the time I can answer questions in less than 10 minutes. So please feel free that if we didn't get to your question or you just need some extra clarification, please feel free to reach out to me afterwards via email or just give me a call. What is COBRA? And it's got a funny name, and it's called the Consolidated Omnibus Budget Reconciliation Act of 1986. It's been amended over the years, but we're kind of going on over 30 years of having this particular statute in place for our group health plans. And really when it comes down to it, and at the risk of oversimplification, here's the basic COBRA requirement broken down into its component parts. 1, you have a qualified beneficiary who, 2, loses group health plan coverage, 3, due to a qualifying event, 4, who may elect to continue that group health plan coverage, 5, for a limited time, and then 6, on a self-pay basis. So those are kind of the 6 main elements of COBRA that are going to kind of color what I want to talk about today. And really, not every employer has to comply with COBRA, but most employers do. The general compliance is that if you are an employer who employed at least 20 or more employees in the prior year, you're subject to COBRA. And I think that really hits most employers. So if you are an employer with 20 or more employees and you have someone who has a qualifying event like a termination that causes them to lose their health insurance they were enrolled in, you have to comply with COBRA. And when we're determining that 20 employee threshold, we're determining that on 50% of typical business days. And there's a specific calculation when we're trying to include part-time employees that I'm not going to really go into depth on, but I just want to make you aware of that there's this 20 employee threshold. Now, there's a couple of nuances that I want to talk about, too, when we're determining that employee threshold. One is that the controlled group applies. And what I mean by controlled group is that if you are a family of related companies, let's say you have parent company A, and parent company A owns 100% of subsidiaries B and C. Now, if you work for subsidiary B, and subsidiary B only has 5 employees, you might think to yourself, oh, we don't have to offer COBRA. But in reality, you have to take into consideration and count all the employees of parent company A plus subsidiary B plus subsidiary C, and if that total is more than 20, then even though your particular company has fewer than 20, you will still be subject to COBRA. So I think that's an important rule, is to remember that the what we call the controlled groups apply. Now, there's with this small employer exception, so if you cross the threshold of 20 employees in year 1, you're going to be subject to COBRA in year 2. And kind of the reverse applies too. So if you're going from 20 employees in 1 year to fewer than 20 employees in another year, you're going to be subject to COBRA until the calendar year after your average is less than 20. And an important concept there is that if you're doing this, what I call the downsizing or shrinking employer rule, you can't just cut off people's COBRA coverage. So if you had someone sign up for COBRA in a year in which you were subject to COBRA, you can't automatically just cut off their coverage when you fall below that 20 employee threshold. So that's just another thing to think about as well. And the reason we're all concerned with COBRA and its compliance is that it carries pretty hefty penalties if you don't follow its very strict rules. And just some of the penalties that you could face if you are non-compliant with the statute and its regulations are the IRS could impose excise taxes on you. The Department of Labor can impose statutory penalties on you. A big component is that if someone didn't get COBRA who was supposed to get COBRA, that person can sue you to recover COBRA. And sometimes if they're successful, your insurance carrier, if you're fully insured for your health plan, or your stop-loss carrier, if you're self-funded, they might not carry those claims or cover those claims, so you'd be left holding the bag, which would be quite significant. Also, courts, per the statute, can impose what they call other equitable relief. They might force you to cover that employee under your plan. And also, if someone has a COBRA ERISA suit, ERISA provides for attorney fees if that plaintiff is successful. So kind of adding up, it can be, you could pay a pretty price for failing to comply. So hopefully I'm going to walk you through some what I see are common mistakes and just give you tips on how to avoid them. Now, the first mistake I want to go on is assuming COBRA doesn't apply to all group health plans. Virtually all group health plans maintained by employers for their employees are going to be subject to COBRA's provisions. And what do I mean by a group health plan? Well, the definition of a group health plan essentially has 3 elements. A group health plan is 1, a plan, fund, or program, 2, established or maintained by an employer, and 3, for the purpose of providing medical care. So if you have those 3 elements, a plan, fund, or program, established or maintained by an employer for the purpose of providing medical care, that particular plan is going to be subject to COBRA. Now, here's some plans and programs that are subject to COBRA. Obviously, your major medical plan is going to be subject to COBRA. Dental and vision, disease management programs, Health flexible spending accounts are actually subject to COBRA. Those are considered group health plans. So your health FSA under your cafeteria plan, where an employee puts pre-tax money in and gets reimbursed for certain medical expenses, that's a COBRA covered group health plan. Same with health reimbursement accounts. I put maybe on employee assistance programs, and actually I probably should in the future take that maybe off, because employee assistance programs are becoming so more robust nowadays that in probably a decade ago, these EAPs, or employee assistance programs, were really only providing referrals to, for example, counseling or therapy sessions. But now the EAPs themselves are actually the ones providing for that care, and that type of care is considered medical care, meaning that the EAP would be considered a group health plan. Wellness programs, kind of the same thing. A wellness program that just rewards employees for meeting a STEPS challenge. That's not providing medical care, even though it's promoting a healthy lifestyle. It's not by definition medical care, so COBRA wouldn't apply to that. But if you have a wellness program that has a component, say, of biometric screenings, that's providing medical care, so that would be a component program that would be subject to COBRA as well. Now, switching gears here, here are some plans and programs that aren't considered giving medical care, so you would not have to worry about COBRA. Obviously, life insurance, disability programs are not covered by COBRA, AD&D, dependent care, long-term care plans. Health savings accounts are not subject to COBRA, and I want to highlight that because health savings accounts operate very similar to health flexible spending accounts, but where health flexible spending accounts are group health plans, health savings account programs are not. And I know that they sound very similar, they operate very similar, but one is subject to COBRA and one is not. Workers' compensation is not subject to COBRA either, and on-site clinics. So if you have a clinic on-site where that just provides, for example, just basic first aid, that's not going to be a COBRA program either. And I want to highlight a little more on wellness program rules, because I know wellness programs are increasing in popularity nowadays. So the general rule is that if the benefit of a wellness program provides medical care, then that wellness program is subject to COBRA. So in the example I said before was if you have a wellness program where you bring in on-site biometric screening and flu shots, that's a program that sponsored by an employer that provides medical care, so technically that program is subject to COBRA. I get a lot of questions about, well, we offer wellness rewards or wellness incentives. What do we do about those with respect to COBRA? And really, if you're offering COBRA, or if you're offering a reward outside of the health plan, and let's say you get a premium discount if you participate in the wellness program, you don't have to offer that premium discount to your COBRA beneficiaries. But if there's a component of your wellness program that deals with something inside the plan, so for example, if you have a wellness program where employees can earn less co-pays or a smaller deductible if they participate in the wellness program, because that's embedded in your medical plan, that reward is embedded in there, you'd also have to offer that reward or incentive to COBRA beneficiaries as well. So here's some tips after we've kind of gone over what's a group health plan, what's not a group health plan, what's subject to COBRA and not. Review your EAPs, your on-site clinics, and your wellness programs. Take a look at those, see, do they actually provide medical care? Because that's really going to be the crux of the decision is, do those programs provide medical care? Highlighting again, remember that health FSAs under a cafeteria plan are subject to COBRA. There's a special rule, however, that COBRA does not need to be offered to an individual who has overspent their health FSA. And without getting into the details, because that could be a whole other webinar in and of itself, I just want to make you aware of is that if someone has overspent their health FSA, meaning that the reimbursements they've received at the time they terminate employment is more than the contributions they've made to their health FSA to date, you don't have to offer them COBRA on that health FSA. I'm happy if you have questions on that. I'm happy to go into more detail on that too. And again, a lot of times I get questions about, well, my health FSA is a HIPAA accepted benefit, so we don't have to offer COBRA on that. Well, they're very different laws. HIPAA accepted benefits and COBRA are completely separate. They've got completely separate analyses, so just don't assume that because a particular benefit like a health FSA happens to be an accepted benefit under HIPAA, it means they're also excluded from COBRA, because that's not the case. Costly stake number 2 deals with leaves of absence, and we get lots and lots of questions about COBRA coverage when there's a leave of absence. And it really comes down to, is there a qualifying event? To kind of briefly go over, COBRA only has to be offered in an instance where an employee has a qualifying event that results in a loss of health insurance coverage. And there are only 7 qualifying events. Termination of employment, reduction of hours are going to probably be the 2 most common ones that you see. Divorce, death, ceasing to be a dependent under the plan, entitlement to Medicare, and bankruptcy are the other qualifying events. But I'm going to bet the 2 that you deal with most are reduction in hours or termination of employment. And the key here is that the event must cause a loss of coverage. So if you have someone who has a reduction in hours, for example, they go from full-time to part-time, but your part-time employees are also offered health insurance, and so from moving from full-time to part-time, they don't lose their coverage. Well, there hasn't been a qualifying event, even though technically a reduction in hours could be a qualifying event. The key to the question is did it cause a loss of coverage? And I also get questions about qualifying events a lot. For example, failure to pay premiums. And this goes to say that because not every qualifying event causes COBRA, not every loss of coverage causes COBRA either. And I think the perfect example where you don't have to offer COBRA is in an event where an employee just fails to pay their share of the premiums, and you terminate their coverage because they failed to pay. That is not, absent any kind of reduction in termination of employment or reduction in hours, you don't have to offer COBRA there. So I wanted to kind of go a little bit of background about qualifying events and this loss of coverage concept, because it comes into play when you're talking about when do we have to offer COBRA, do we even have to offer COBRA if someone is on an FMLA leave of absence. And the key here is that the beginning of an FMLA leave is not a qualifying event. So even though someone goes on, let's say, has a baby and goes on FMLA leave for 12 weeks, they technically have a reduction in hours at the start of their leave. And they could lose their group health plan coverage if they choose to discontinue it. But under the FMLA rules and the COBRA rules, that reduction of hours at the beginning of the leave is not a qualifying event, meaning that you can't offer COBRA at the beginning of the leave. However, the end of FMLA leave is a qualifying event if the employee does not return to work. So even if the employee discontinued or elected not to continue their health plan coverage while they were out on FMLA leave, even if an employee elected to continue health coverage but failed to pay their premiums and you terminated that coverage, if that employee does not return from the FMLA leave, they are still entitled to receive COBRA. So that's a very important concept when you're dealing with FMLA leaves of absence and when COBRA applies and when it doesn't apply. Non-FMLA leaves of absence are a little different because obviously it's not FMLA, so we don't have to worry about the FMLA rules. Technically, a non-FMLA leave is a reduction in hours because that employee is working from however many hours they were scheduled on the day before their leave to working 0 hours the day their leave begins. So it's technically a reduction in hours. However, COBRA doesn't come into play in that instance unless there's an actual loss of coverage. So questions that come into play when you're dealing with non-FMLA leaves of absence are, when do we need to send a COBRA election? When does the maximum COBRA coverage period begin? Because you can have a little more flexibility in that. So tips for avoiding mistakes of handling COBRA when someone's on a leave of absence. Remember the rule for FMLA coverage is that only offer COBRA coverage to employees on FMLA leave if that employee does not return from work. And remember that rule applies even if that employee decided not to continue their coverage while on FMLA leave, and even if they failed to pay premiums for coverage that they elected to continue and the coverage terminated. So that's an important key to remember. And also, with respect to how you're dealing with COBRA and benefit continuation during non-FMLA leaves of absence, you really need to have like a good policy in place. And there's several options that you can do. And one option is to treat the start of the non-FMLA leave as the qualifying event. Another option is to treat the end of it as a qualifying event. Another option is to offer what we call alternative coverage. Kind of the details of those particular options are outside the scope of this webinar, but I just wanted to highlight that dealing with non-FMLA coverage options afford you a lot of flexibility, but the point is that you should have a policy for it, because having no policy is a bad policy, and you really need to make sure that everything's coordinated. Your handbooks, your plan documents, and your insurance contracts are all on board and all say the same thing about what happens to benefits for people who are on non-FMLA leave. So the third mistake I see, and I handle this a lot with employers, is failing to provide a COBRA election notice. One of the very key elements of COBRA is that when there's a qualifying event that results in the loss of coverage, and your typical example is going to be someone who terminates employment, each beneficiary, or each what we call qualified beneficiary, with the qualified beneficiary being the employee who was covered by your plan, and any dependents who were enrolled in coverage at the time the employee lost their own coverage under the plan. Each of those individuals needs to receive and have the right to elect COBRA coverage. You can use a single election notice if all those individuals reside at the same address. And there are specific timing rules for when that employee has to receive that notice and when the employer has to send it out. So that election notice, which alerts the terminated employee, in my example, and any of their covered dependents about their COBRA rights, has to be sent within 14 days after the qualifying event. However, most of you as employers are also going to be the plan administrator of the particular group health plan that you have, so that 14-day period actually expands to 44 days in that instance. So generally there's 44 days, which is around 6 weeks, that you have in order to get that election notice out to the individuals who are entitled to it under COBRA. One thing I want to caution on is the Department of Labor does provide a model COBRA election notice, but I caution employers from using it verbatim, because it's very vague. It doesn't take into consideration your specific plans and your specific plan designs, and so sending it out without really tweaking it to address your unique employer situation, your unique plans, kind of can open you up for some headaches later on. So just caution using that election notice as well. So one thing that happens frequently is an employee terminates employment, and for whatever reason the employer forgot, or the data got lost when the employer was notifying its COBRA administrator of who needs to be sent a notice, and the election notice never gets sent out. To avoid that mistake is routinely run audits of your employee data. So if you see that someone has terminated employment in the last quarter, double check to make sure that you or your COBRA administrator, if you're using one like BASIC on your behalf, has sent out that notice timely to that person. So just routinely run audits of that of your employee data, because if there is going to be a mistake, it's better to catch it early rather than later. this kind of goes along to say, if the second bullet point is, make sure that there's a process to timely communicate or timely provide data feeds between you and your COBRA TPA if you use one, so that, because they're not going to know if an employee terminates and needs a COBRA election notice unless you tell them. So just make sure that those processes are good and the data feed is actually happening. Now, if you do happen to run the audit and it shows that you failed to provide a COBRA election notice, it's not the end of the world, but you really do want to provide that notice as soon as possible. And what that's going to entail is essentially you send the notice out and you're going to give that particular employee and their dependents the option to retroactively elect COBRA coverage. And because that situation is going to be unique, the normal COBRA election notice that your TPA sends out might not be sufficient to really address what has happened and what their options are. So in that instance, you really need to kind of work with your TPA or work with your benefits consultants or counsel to kind of modify and make kind of like a special election notice to really address that situation. So the problem's fixable, but it will probably require some kind of customization of your election notices. Now, let's say you had someone elect COBRA and now you're collecting premiums from them for that COBRA coverage. I kind of want to go over some of the issues with handling COBRA premiums that I see employers make mistakes. One thing that has to be allowed is monthly premium payments. You cannot require, for example, an employee to pay 4 months worth of COBRA up at a time or a year's worth of COBRA coverage at a time. You must allow them to make at least monthly payments. And you also have to allow a grace period. So if COBRA premium payments are due on the first of the month, you cannot cancel coverage until the end of that particular month's grace period, which usually in the case 30 days goes to the end of the month. And also, when you send out the initial COBRA election notice, an employee, when they return that election notice saying they want to elect COBRA, isn't required to also send you a check for the first month's premium payment. They actually have 45 days from the date that they send you that election in order to subsequently send you that first premium payment. But they do have to pay all premiums through the date of the COBRA coverage period in order to make that applicable. Another thing that I feel we deal with a lot is if a qualified beneficiary is legally incompetent, you have to extend the payment deadline. So if you have a particular, let's say, former employee who has dementia, who elected COBRA, the payment deadline has to have a little bit of flexibility in that case. And one other thing to highlight is that with that first COBRA election payment that you have to give 45 days, you have to give a period of 45 days to the employee, you can still pen claims during that period until payment is made. So there's no reason, there's nothing that says you have to pay those claims before you get payment, but you're allowed to pen them. But obviously, if they do subsequently send you that check within that 45-day period, then you're going to have to process and run those claims. There's a concept of premium shortfalls, and I don't think this happens too often, but it happens often enough that I get some questions on it. It's this concept of an insignificant shortfall, and generally what it means is, someone has COBRA coverage and let's say it's $1,000 a month, but for 1 month they only send you $750. What do you do with that shortfall because it wasn't the full premium payment? And COBRA says that if the shortfall is insignificant, which is the lesser of $50 or 10% of the premium due, you cannot cancel their coverage. And you can take, however, the following actions, as I described in the slide, if you get that shortfall. And if it is insignificant, you can accept it as full payment of the premium, or you can notify the beneficiary and say, hey, we didn't receive your full payment, and require them to pay that difference within a reasonable period of time. And it has usually 30 days is what the DOL says is a reasonable period of time. Again, if it's insignificant, though, you can cancel the coverage, and you don't really even have to notify them that they do have remaining premium due. So here's some tips for avoiding this particular mistake. Ensure that you've got procedures in place to administer the grace period, because a lot of times either you or your COBRA administrator, I bet, is going to be getting premium payments after the date they were technically due. So there should be a process in place that can kind of track that and apply them to the applicable month of coverage when they're received. And again, also establish procedures for determining if there is an insignificant shortfall. Hopefully you don't get a ton of people who aren't paying their full premium, but you might. And just remember, you can't cancel coverage if that shortfall is insignificant. But what you'll need to do is have a procedure or process in place where you're deciding, okay, will we just accept this as full payment because they were only $2 short, or do we want to send them a notice and say, hey, you were $2 short, please pay us an extra $2 within 30 days, or else we're going to cancel your coverage. It's kind of up to you how you want to administer that. And that goes to my third bullet point, is if you want to put notification procedures in place to alert beneficiaries of shortfalls, make sure you've got good templates for that. Now, I'm still talking about failing to address Affordable Care Act issues because the Affordable Care Act is still a thing. It has not been, although the individual mandate has been reduced to 0, the Affordable Care Act is generally still around, and employers have to comply with a lot of the component parts. And one of the big component parts of the Affordable Care Act is what's called the employer shared responsibility provision, or the player pay penalty for employers. And generally, that provision is the one that requires employers with 50 or more employees to provide a certain level of coverage to all of its full-time employees or face penalties. And those penalties are still around. And one of the Affordable Care Act concerns is the interaction of COBRA with the stability period if you're using what we call the look-back measurement method. And just a brief, and again, I can go into a whole webinar about stability periods and look-back measurement methods, but in a nutshell, what it is a method to determine who your full-time employees are for purposes of that employer mandate. And one of the methods that the IRS allows employers to use is this concept of a look-back measurement period, where you look back at a certain period of time. It's usually going to be a year long, average out an employee's particular hours, and if that employee turns out to be a full-time employee per the employer shared responsibility regulations, they're going to be what I call locked in as a full-time employee for a subsequent stability period. So one of the things that you should just be, again, I'm not going to go into huge details about this, but I wanted to give you enough information to just have it on your radar so that you can identify potential problems and take appropriate action if necessary, is that questions that come up with this interaction of COBRA with the stability period under the look-back measurement method is, when do we measure the COBRA maximum coverage period? Is it going to be the date of the qualifying event, or is it going to be the date of loss of coverage? There's certain things you really kind of need to decide and flesh out. So if you're a particular employer who is using the look-back measurement period, one thing you do need to think about is how you're going to deal with COBRA and how it interacts there. Another component of the employer shared responsibility provisions is the 1095-C reporting, and that's the form that you have to give to all your employees, which shows them what months in which they were enrolled in coverage or their offers of coverage. And there's specific ways to report COBRA coverage on those 1095-Cs. Again, it's sort of beyond the scope of this particular presentation, because it could take an entire, its own webinar in its entirety, about how to complete that 1095-C reporting. But I just want to kind of let you know that, that's an issue that we see a lot of employers grapple with, of if someone terminates employment and they go on COBRA, what code am I supposed to put in line 14? What code am I supposed to put in line 16? Those are just some things you need to think about. And one thing you can do with that in particular is work with your payroll provider, your benefits consultant, to really ensure that that's you know, properly reported. And we just kind of finished up the 2018 reporting earlier this year. Hopefully this is going to get on your radar to help you out with your 2019 reporting when you're completing those forms early next year. So the sixth costly mistake that I want to go into is failing to address COBRA issues in mergers and acquisitions. And I feel this is an area that really opens up employers to potential COBRA liability, simply because when you're in the throes and in the weeds of an acquisition, usually the last thing you're really thinking about is your employee benefits. I know for a fact that even though I've been practicing with some of my corporate attorney colleagues here for over a decade, they still don't realize that we, the employee benefits attorney, should be brought in at the very beginning rather than at the very end to kind of help them address employee benefit issues. And one of the main ones is, you know, the COBRA issues that are involved in mergers and acquisitions. And the main thing is that business reorganizations, a merger, a buyout, you know, an asset sale, a stock deal, can cause qualifying events that simply by the nature of the business reorganization is a qualifying event because it causes a covered employee to lose coverage. It's usually due to a termination of employment or a reduction of hours. And one thing that doesn't get thought through enough, at least in my experience, is you know, who's responsible for providing COBRA coverage in the context of when the reorganization does indeed cause a qualifying event. And there's very different rules for when you have an asset deal or when you have a stock deal. And kind of knowing the nuances of both is really helpful. And one thing that the COBRA regulations deal with is this concept of, they call them M&A qualified beneficiaries, which are mergers and acquisition qualified beneficiaries. And the COBRA statute, if you can identify who your M&A qualified beneficiaries are, you're going to go a long way into figuring out, you know, how are they supposed to get COBRA, who's supposed to provide them with COBRA and index. So kind of the first step is to identify who those people are. And M&A qualified beneficiaries include two categories. One, it's going to be those people who are receiving COBRA under the seller's plan before the transaction. So that's kind of the first class of M&A qualified beneficiaries that we have to worry about. And the second class that we have to worry about is the class of employees of the seller whose employment is going to terminate because of the transaction. Because the termination of employment or a reduction in hours is a qualifying event if it causes a loss of coverage, and a lot of times that does happen in the mergers and acquisition context. And two things that I want to kind of highlight here is that there's no qualifying event, meaning you do not have to provide COBRA to those of sellers' employees who are employed by the buyer after a stock sale. So in your typical stock sale, you have Company A is buying all the stock of Company B, and to oversimplify things, Company A is essentially stepping into the shoes of Company B, and not a lot is really changing from kind of like a day-to-day employee level. In that instance, so if you have a seller an employee of seller who's just going to continue employment with the buyer, there's no qualifying event in that case. There also isn't a qualifying event if seller's employees, if the buyer in an asset deal is a successor employer. And successor employer is a very unique kind of term of art in the COBRA context. And generally what it means is that in an asset deal, the buyer is assuming and purchasing all of the assets of the particular seller and basically continuing operations, the majority of the operations of the seller. So that's what we mean by successor employer. And so there's also no qualifying event in that case as well. Now, once you've identified who the M&A qualified beneficiaries are who could be affected by the transaction and who might have COBRA rights that are implicated by the transaction, the next question is well, what plan has to cover them? Because seller's plan obviously covered them prior to the transaction, and seller's plan might go away after the transaction. Seller's plan might continue. Buyer's plan might take over. There's specific default rules on how to address that in the COBRA regulations. But what's important is the buyer and the seller, you can contract for different rules. And the default rule is that the seller must cover those qualified beneficiaries if it maintains any plan after the transaction. So let's say in an asset deal, Company A buys Company B maintained a health insurance plan for its employees. Company B, because it didn't sell, it only sold half of its assets, it didn't sell all of its assets as part of that transaction, so it's going to continue its health insurance plan for those employees that remain. For those employees whose employment was terminated by the buyer as part of that transaction, COBRA coverage will actually have to be offered under the seller's plan, because the default rule is if seller maintains any kind of plan after the transaction, it's seller's plan who's going to be responsible for that COBRA coverage. Now, the buyer's plan is responsible for COBRA coverage if the seller ceases to maintain any plan after the transaction. So in my asset deal, if the seller if the seller just ceases all operations after it sells all its assets, winds everything down, no longer maintains its group health plan because it sold all of its employees, there's no point anymore. If the buyer is not a successor employer in that instance, then buyer's plan has to pick up the COBRA coverage for that. So there's a lot of details, and these are very complex. As I say kind of in my tips here, is that these COBRA rules in the context of mergers and acquisitions are very detailed and very complex. And I don't expect you to kind of know the nitty-gritty of everything, but I hope you have enough to realize that if you are acquiring a new business, or your business is being acquired, that you have enough information to kind of realize that, hey, this is something we probably need to look into. And so the last costly mistake that I want to go into is failing to identify COBRA issues in severance agreements. A lot of times you have an employee, usually it might be an executive, who is terminating employment, and as part of their severance agreement, the company offers to pay for 6 months worth of COBRA premiums. Or maybe the severance agreement instead says we will let you continue in the group health plan for up to 3 years. If there's provisions like that in your severance agreements, you really should be aware of that, what the COBRA implications are. So as I said, extension of group health plan coverage or COBRA premium subsidies are very common. But one thing to know is that severance agreements is not a substitute for COBRA compliance. So if you think that, hey, we're giving this guy a good deal by saying, he can have 3 years of coverage after he terminates employment, which is more generous than what he'd get under COBRA, that, hey, we don't just send him an COBRA election notice. That's not the case. That severance agreement does not replace your COBRA compliance responsibility. So you should really administer your plan in a manner that's consistent with COBRA, and that includes timely notification and timely provision of the COBRA notice to that employee who is the subject of the severance agreement. And poorly drafted severance agreements can cause a lot of confusion for when COBRA coverage begins. So for example, if the employer in the severance agreement says you get 6 months of continued group health plan coverage, to me as an attorney, I read that and I say, is that going to be an alternate for COBRA? Is that going to be 6 months of continued coverage plus the COBRA maximum COBRA coverage period? Does that 6 months run concurrently with COBRA? So hopefully I'm kind of giving you just some highlights here that will help you think that when you're looking at severance agreements, you know, in the future, and they deal with some kind of continuated coverage post-termination, that it just kind of makes you think of, well, how should we deal with this? And some of the special severance issues that I see are if you have a fully insured medical plan, for example, or you have a self-funded plan, but you pick up stop-loss coverage on that particular program. If you're telling an executive, for example, in his severance agreement that he's going to get 6 months of extended group health plan coverage, and then he's going to get his 18 months of COBRA coverage on top of that, you really need to make sure that your insurance carriers are going to be on board with that arrangement, because I bet that most of your insurance plans will say they'll either cover active employees or COBRA beneficiaries. So you could be holding the bag if you've promised this executive 2 years of continued coverage. You could be holding the bag for some of those claims when your insurance carrier stops providing payments after the end of the COBRA maximum coverage period. So whatever you decide to do with respect to continued coverage in a severance agreement, you really need to make sure that your insurance carriers are on board with that. Another thing that trips people up too is paying pre-tax COBRA premium payments. So let's say that your particular executive is getting severance pay, and he wants to pay his COBRA premiums pre-tax from that severance pay, just like he did as he was an active employee. That is allowed. However, due to kind of rather complex cafeteria plan rules, those pre-tax contributions can really only be made through the end of the year. So if you have an employer or employee who's getting former employee getting severance for over the next year and a half, when he crosses that plan year or the end of the year, those premium payments can no longer be pre-tax due to cafeteria plan rules. And there's also some discrimination issues. And when I say discrimination issues, I'm talking about self-funded health plan discrimination issues. And those come into play in instances where you have a self-funded health plan and you are continually offering continued coverage beyond the COBRA maximum coverage period for executives, but not for kind of your rank and file employees who terminate employment. That's kind of where I see discrimination issues come into play, which generally say if you have a self-funded plan, you really can't provide a richer benefit to your highly compensated employees over your non-highly compensated employees. So if there's a coverage continuation benefit that your former executives are always getting when they terminate employment, but your rank and file employees aren't, that could cause some discrimination issues as well. So just some tips on avoiding this particular costly mistake is address COBRA and severance agreements and be specific, because a lot of times the severance agreements don't specifically address COBRA continuation coverage, but they, as I said before, they do provide for some type of extended coverage for a specific time period. But they don't specify whether that extended coverage is alternative coverage. Does it run concurrently with COBRA coverage? Is it tacked on to the maximum COBRA coverage period? So whatever is intended, you really need to make sure that you're addressing how COBRA interacts in those instances in the severance agreement itself. And as I said before, and just highlighting it again, review your insurance certificates and your policies. You know, if you are extending coverage under a severance agreement to an employee that's beyond what the COBRA maximum coverage period is, are claims going to be paid for that period of time? You really need to check your insurance certificates and policies for that too. And also, if you want to allow an employee to make pre-tax premium payments from any severance that they're getting to pay for their COBRA premiums. Your cafeteria plan document needs to specifically provide for that. So make sure you're reviewing that document as well. And so that is really kind of my top 7 compliance mistakes. Hopefully I gave you some good tips how to avoid them. Hopefully you learned something new, and you have a couple of things that you want to be aware of, you know, as you kind of deal with COBRA issues in the future. Anna, I'll turn it back to you to see if we got any questions during the presentation, and if not, I'm happy to answer them. If not, if people have questions that they think of later, my contact info is part of the program, and feel free to reach out.
Fantastic. That's so nice of you, Stephanie. usually we do not offer that, or the presenter does not offer that. So that is a really great value that you're doing that. We do have some questions. Some of them you addressed in the webinar, but I think they just like to hear it maybe presented or said just a little bit differently. So I'm going to go through some of those real quick. If an employee goes on voluntary leave of absence, they don't mention FMLA, but voluntary leave for 2 months, is that employee eligible for COBRA? If not, how does the employer handle it?
It depends. Is that, and the crux of the question is, and if this is someone's particular question, I'm happy to kind of follow it up. It depends on if that employee is on FMLA leave or on a non-FMLA leave. That's really going to kind of turn my answer, because if it's FMLA leave, when that employee goes on a leave of absence, is not a qualifying event because they have the right to continue their group health plan coverage while they're on FMLA leave. It's a qualifying event only if they fail to return to work in that instance. If it's a non-FMLA leave, you've got flexibility of how you want to handle it. And really the question there is, we have an employee who voluntarily went, and in this case, let's assume it's a non-FMLA leave. The question is that employee losing coverage? Because a non-FMLA leave is technically a reduction in hours, and if they lose health plan coverage under the terms of your plan, then yeah, that is a COBRA qualifying event, and you'd have to send a COBRA election notice. But there's some flexibility in how to handle that there. So you know, I'm kind of happy to go into more detail if we know for sure if it's an FMLA leave or not.
Okay, and they didn't mention it, so at this point I'm kind of assuming that it is not, but you're right, it's possible that it is, and they just didn't include that. But that actually answer kind of leads into the next question, and if somebody voluntarily takes a reduction in hours and then are no longer eligible for health benefits, are they eligible for COBRA?
Yes. Yes, they are, because the crux of COBRA is, you know, assuming you're an employer who's subject to COBRA, if you have an employee who has a reduction in hours and that reduction in hours causes them to lose their health insurance coverage, then that is considered a COBRA qualifying event, and that kicks in all the COBRA obligations, such as providing them with the election notice, giving them 45 days in order to make that first payment, and all that.
Okay. And then next question is kind of interesting one I haven't gotten before. They have an employee that is pregnant and they voluntarily terminate their employment before giving birth. That then ex-employee enrolls in COBRA. Once she gives birth, is that child eligible for COBRA as well?
Yes, you can. Any dependent that you gain during your COBRA coverage period is eligible to be enrolled in the plan as a dependent, and obviously you could charge the COBRA rates for that extra coverage. But yes, if you give birth, if you get married after you elected COBRA, you are able to enroll those new dependents into COBRA coverage as well, provided that you're paying the applicable increase in premium associated with it.
Okay, that's great. That one was really one I've never heard before. And that talking about the different level of coverage or the cost of coverage kind of leads into the next question. When COBRA offering to dependent children over 21 but under 26 who've been on a family plan or an employee plus, what kind of coverage should be offered to the children once they age out?
You offer them basically you would offer them single coverage. They do though have the option that you would offer, no, I should say you offer them single coverage because they're no longer eligible to be a dependent under your family coverage plan. So the option would be single coverage.
Okay. Great. Now, a controlled group question. If Company A has 15 full-time employees and they offer a health plan, and Company B also has 15 employees, but they don't offer a health plan, they both have the same 100% owner, is Company A subject to COBRA?
Yes, because the determination of whether or not you're subject to COBRA is what is the total number of employees in that related employer group. It's not determined by which employees are employed by an employer who provides health insurance coverage. So in this case, you look at all 30 employees in both subsidiaries because they have the same common parent. You don't exclude the employees from that count of the particular subsidiary who doesn't offer a health plan.
Okay. Next question really talks about kind of and we had a couple of these payments. So one person was said, they keep running into a situation where, let me try, I want to find that one. Okay, they elect COBRA, but they wait to send the payment. They're enrolled in coverage, but then later, after, I can no longer backdate the terms. They never send the COBRA payment. It seems all I can do is backdate them as far as possible, but sometimes there is a loss of premium. What could be addressed? How do they address that?
So what I think you're saying, and if this is your particular question, please, if I am interpreting this wrong, it sounds like someone sent back a COBRA election notice where they elected COBRA. However, they never sent in that first premium payment timely, meaning that they sent in their COBRA election timely, and then they had 45 days in which to send that first premium payment. If you never get that first premium payment, you can retroactively terminate coverage back to the dates that they lost coverage under your plan. Because just because someone elects COBRA doesn't mean that they're automatically entitled to it. They need to pay for it too. And if you never receive that first initial payment within the 45 days, the day window that the COBRA regulations give them, you're not obligated to extend COBRA coverage to them. Because it's their responsibility not only to say that they elected it, but to also pay for it within the prescribed time periods as well. I think that's what you were asking, and if I interpreted that question wrong, feel free to reach out to me, and I can, kind of walk you through it.
Okay. Someone has a kind of follow-up question, maybe we just need to clarify, on the controlled group with the 15 full-time that had coverage and then the 15 that were not offered coverage. You said that did qualify for COBRA. Do you have to offer COBRA then to the 15 that never had coverage to begin with? Or is it really just the 15 that had? Okay, so it is the 15 that had coverage initially. I think they just
right, because I think one concept that kind of gets lost in the weeds of COBRA is that if someone never had coverage or never had coverage or never enrolled in coverage and they have a qualifying event, you don't have to offer them COBRA. Because like if I if I waived health insurance from my firm because I was, let's say I'm enrolled in my spouse's plan and I have a termination of employment, you don't have to offer me COBRA because I was never enrolled. So I think sometimes that basic concept gets lost as we're kind of working through the weeds and all these complex COBRA regulations, is that if someone, even if they have a qualifying event like a termination of coverage, if they were never offered or never enrolled in coverage, they're not entitled to COBRA at all. So COBRA doesn't really give them any greater rights as a terminated employee than they had as an active employee.
Okay, that's great. Somebody was also asking about how notices have to be delivered. Do they have to be mailed? Can you give them to someone in person? Can they be emailed with like a return receipt? What would be your recommendation for that?
My recommendation is always first-class mail. They don't need to be, you don't need to give them return receipts or tracking. My recommendation is first-class mail to the last known address. You can definitely hand deliver them, but if you're going to hand deliver them, have them also sign a form that simply states, I acknowledge receiving via hand delivery my COBRA election form. Because really what you want to do is just have the backup documentation in place in case someone says, hey, I never got my COBRA election form. But in ways to kind of protect that is if you're going to hand deliver, get them to sign a statement acknowledging receipt. And if you are mailing them, make sure that you're mailing them to what in your system is their last known address. Because for mailing, it's assumed that if you do first-class mail, regular mail, the post office is going to get it to them. And as long as you mailed it to the last known address you have in your files for the particular person, then your obligation has ended. Email is a little trickier, and I don't recommend it simply because the IRS has very specific rules. I think they're a little outdated about when what they call electronic media is appropriate for certain instances. So first preference is mailing, second preference is hand delivery, and I really don't recommend emailing simply because there's a lot of kind of complex rules related to that, and it's just easier just to stick it in the mail.
Okay, great. And now we have two questions just clarifying number of days. So the first question is, when does payment need to be received? They thought it was 63, but she thought you just said 45.
Well, it's technically 63 it's technically 63 if you're counting the because an employee has, so getting in time frame here. So it's the 45-day period runs from the date that they elected COBRA. So here's kind of a timeline, and maybe in another next year's presentation, or if we do this again, I'll put in a timeline. So they terminate employment day 1. Then you as the COBRA administrator have 44 days in order to send out the election notice. So we got day 1 to day 44. Day 44, let's say they send out the notice like on day 44. Then after that, the employee technically has 60 days in order to return that election form. So we've up to let's say day 104 now. Now from day 104, they technically, let's say they send in their election at the very last minute, right before the end of that 60-day period. They then have 45 days in order to get that payment in. So we're looking at almost 6 months since the termination of employment in my example for the employee to get their premium payment in. But the kicker there is they have to send in the premium payments to cover that entire period. So we're not talking about just one monthly payment. We're talking about whatever the cost would have been to get them retroactive coverage back to the date they terminated employment or lost their coverage. So that's kind of how the timeline works. Is there's a 44-day window in which to send send them the election notice. Then the employee has a 60-day window in which to return that election notice. And then from the date that they return that election notice, they have the 45-day window in which to get that premium payment in that'll cover the entire retroactive period run. So you can have a long period of time between the date of the qualifying event, which is probably a termination of employment, to the date that they make that first initial payment.
Okay. Yeah, timeline. Yeah, that is kind of interesting, though, how long it can stretch out like that.
Yeah. Yeah.
And that actually, you answered the other person's question, and that was like, how long do you have to send the notification? She said that she heard somewhere 14 days. So she just wanted to double check on that.
It's a little convoluted because it's 14 days. If you are the employer but not the plan administrator, and it'd be if you are an employer but not the plan administrator. And when I say plan administrator, I'm not talking about a COBRA administrator. You have 14 days to notify. If you're the employer, you have 14 days to notify your plan administrator of the qualifying event, and then the plan administrator has 30 days after that in order to send the election notice. But in 99% of the case, the employer and plan administrator are the same thing per the terms of the plan. So that's why you get the 44-day window, which is the 14 days plus the 30 days.
Got it. Okay. Next two questions revolve around FMLA. So an employee is out on FMLA and they fail to pay the employee portion of their premium. How do they handle that? Do they need to have a policy? Do they offer COBRA? I mean, how would they handle that situation?
So what happens, and this is going a little outside of, this is digging into the FMLA rules rather than COBRA rules, but during FMLA leave, if an employee is on FMLA and their coverage ends for whatever reason, and in this reason it's failure to pay premiums, they are still entitled to a restatement of coverage when they come back to work. And if they don't come back to work, they are entitled to COBRA, even though technically their coverage ended during their FMLA leave. So kind of a way to think about it is whatever happens to coverage during an FMLA leave, whether they elect not to continue it, they elect to continue it but fail to make their required share of premium payments and it ends, you ignore kind of what happens during the FMLA leave, because as soon as that FMLA leave ends, either the employee is going to return to work and you have to reinstate their coverage if it ended, or the employee is not going to return to work and you still have to offer them COBRA even though the coverage ended while they were out on leave.
Okay, and actually in that answer you answered both of them. That's perfect.
Oh, okay. Yeah.
Perfect.
Yeah. So that's
and we do.
That's delving into kind of the more FMLA requirements. But we actually just did a leave of absence and benefit continuation program, so those are all fresh in my mind, so luckily.
That's good, yeah. And we're offering a FMLA webinar upcoming here, and that will be included in the email I send tomorrow where you can register for that. And then we've also done several in the past, so you can always go back to the webinar library and look at some of those recordings. I'm sure coverage is covered within those. As Stephanie mentioned, it's really more of an FMLA aspect than what we usually cover in the COBRA webinars. All right, so we're doing really good, Stephanie. We're getting through a lot of questions. Okay, now I lost my question. Here it went. Okay, what restrictions are there if you have to change an employee contribution mid-year? For instance, you change carriers mid-year. We have a group that also just considered raising the zero contribution to something else due to financial problems. How does that affect the COBRA participants?
It affects the COBRA participants because essentially whatever you're doing for your active employees, you have to pass along the same thing to your COBRA beneficiaries. So if you're deciding mid-year or renewing, changing carriers from one year to the next, you have to also change those carriers or allow your COBRA people to enroll in that coverage, and you'd adjust their premiums to whatever the new rates are as well. So the general rule of thumb is whatever you're doing with your active employees and the insurance for them, you have to also allow your COBRA beneficiaries to do. So if you're offering new plans to enroll in during the next open enrollment, you also have to offer that option to your COBRA beneficiaries as well.
Okay, great. If COBRA has 18 months, but if they have an illness, does that not extend for another 18 months? Can you talk about kind of the time frames there?
Yeah, so one thing I didn't get into is there is a concept of what we call a disability extension, and I don't remember all the rules off the top of my head, but essentially the 18-month COBRA coverage period relates to termination of employment and reduction in hours. So if you have that, you're entitled to 18 months of COBRA coverage. You can extend that 18 months to a total of 29 months if you have a disability. And there's specific timing rules of when the disability has to occur and when you have to, when I say you, when the former employee has to provide notice of a Social Security disability determination. So there's specific rules there, but there are instances when you can extend extend your COBRA maximum coverage period, or a former employee can extend their COBRA maximum coverage period if it's in the event of a disability.
Okay, that's a new one for me, which is why I don't do COBRA administration. There's too much to remember. Okay, so the next couple questions I'm kind of going to group all together. They're all about medical FSA. Someone is asking if they decide not to elect the health plan, can they still elect their medical FSA? And then someone else was asking, can they? Go ahead. I'll let you do that one first.
Yeah, and it depends. It depends on what your plan says for your active employees, because a lot of times plans will say you can't independently elect your health FSA unless you also elect medical coverage. And if that's the case, then no, there's no independent right to elect the health or medical FSA if they don't also choose COBRA coverage for the major medical plan. However, if your plan is designed in a way that would allow an active employee to just enroll in the health FSA without also having to enroll in your major medical insurance, then yeah, you would also extend that same right to your COBRA beneficiaries.
Okay, and then this doesn't actually say if it's tied to the medical plan, but it says that employer funds the medical FSA puts in a lump sum of $500 at the beginning of the year. No additional employees' money is contributed. Does COBRA need to be offered for that $500 if the employee separates?
No. No.
Oh, okay.
Because that is, even though that's a contribution going into the plan, that is technically a payment made outside of the plan, and you do not need, you could if you wanted to, but you are not legally required to make a similar contribution to COBRA beneficiaries.
Okay, and then again for FSA, is this person correct in believing that the employee must have an unused amount in their FSA fund in order to elect FSA?
Correct, and that we call that underspent, meaning that their contributions made to the date of their qualifying event, so let's say made through their date of termination for the year, if those contributions exceed the amount that they've requested so far for reimbursement, then that's the only time you have to offer COBRA coverage to them. You don't have to offer COBRA coverage if they overspent their account, meaning that the amount of contributions they made to date was less than the amount that they reimbursed, and it's all due to this concept called the uniform coverage rule, which means that if you elect, for example, $2,600 of health FSA coverage for a particular year, that entire $2,600 is available to you day one, even though you haven't actually contributed that amount yet, because you'll be doing so over the course of the year. So that's kind of the reason for this overspent, underspent distinction of whether or not you have to offer COBRA.
Okay, great. We have just two questions left, but real quick before we get to those two questions, a couple things. I did put in the certificate for the HRCI and SHRM credits. We don't say the numbers or codes on the webinar because we record these, and the credits are only available for live attendance. If you want to grab that now, you can. If you want to wait until I email everybody tomorrow, it will be included in that email along with the certificate and a link to the recording and our upcoming webinars that you can register for. In a moment, my associate Gloria is going to cover basics COBRA administration for about 5 minutes. If you can stick around for that, that would be great. And then when you exit today, if you need to exit in a hurry, we do have a very short survey that we'd appreciate it if you could fill that out. It's the fastest, easiest way if you want to get a COBRA quote for basics COBRA administration or any of our other services, FMLA, absence management, ERISA essentials, FSA that we've been talking about here too. You can do that. It also lets us know how we did on today's presentation. Did you think it was of value? Is there something drastically missing? Anything like that, the survey is a great way to give us some feedback. So last little questions here. I flagged right at the beginning because they're talking about EAPs and whether or not what's covered in COBRA and not. So one person asked, we offer a hospitalization indemnity plan. Does that fall under COBRA?
No, hospital indemnification plans are not subject to COBRA because those technically aren't providing medical care. And I'm assuming, this is assuming it's your typical hospital indemnification where the plan is paying a set amount of money, for example, per day in the hospital. It's not directly reimbursing specific care expenses. It's just saying we'll pay $100 a day if you're hospitalized for X, Y, or Z reason. At least that's when I hear hospital indemnity plan, that's what I'm thinking. And if that's the type of plan that you have, then no, that's not subject to COBRA.
Okay. And then the last question is, they offer an EAP, but it's via their disability standalone insurance. They don't think they can offer continuation without the disability. So is that not covered through COBRA then?
Yeah, and that's tough because in that instance, and that kind of happens a lot where, you have like an LTD program through like Lincoln Life or something like that, and kind of as an added benefit, they say, hey, we have this EAP as well, but it's really hard. You can't separate. It's administratively difficult to kind of separate the two components because they go hand in hand. And in that instance, technically you're supposed to offer COBRA on the EAP element. But I will say that for all intents and purposes, that is a very low risk. In that instance, it's a very low risk situation. So I don't want to go out and say that, yeah, it's okay not to do it because you're technically supposed to, but when you kind of look at the risk involved of not doing it, it's pretty low. So.
Okay. Thank you so much, Stephanie, for joining us today. That you definitely, I've listened to a lot of COBRA webinars. I don't do COBRA administration, obviously, but there were some things that I learned today, and I'm sure our audience did as well. Thank you.
Okay, thank you very much. Appreciate it. Always happy to, I like doing this program with you guys. So.
All right, and somebody did mention that your email wasn't included in the slides. I'll make sure I include that in the post email tomorrow as well. Okay.
Yeah, and for anyone who needs it right now, it's sgrant, so SGRANT, at WNJ.com.
Fantastic. That should be an easy one. All right.
Yeah.
Gloria, I can see your screen. Can you hear me okay?
Yes. Can you hear me okay?
Yes, I can. Thank you. All right. So we didn't leave you a whole lot of time. So if you want to jump ahead to COBRA, I already kind of went over basic at the very, very beginning. So we want to make sure we get right to the meat of things. Thank you.
Thank you so much, Anna, and thank you, Stephanie. What a great presentation. I'll be very short. I'll be very brief. I'm just going to give you an overview of the COBRA administrative services that we offer. BASIC has been administering COBRA for over 24 years. In those 24 years, we've developed best practices for COBRA to ensure that we're providing you with consistent and reliable compliance. And I think another thing that our employers appreciate is that we also take the majority of the liability off of employers. Before I outline the services that we offer, I'd like to talk about one of the most appreciated benefits that I hear from my employer groups, and that is that the employers that sign up with us are assigned a dedicated account manager for your day-to-day administration, so that our clients will receive a direct phone number and the email address of the account manager that they'll be working with consistently. And I can't tell you how many times I hear people really are very happy about that. Now I'd like to just give you a real quick outline of the services that we offer under COBRA. We, of course, will send out all the required notices, such as the general notice or the initial notification letter. We also send out qualifying event letters, termination letters, any other required notices. We also handle the premium billing and the collection from our COBRA participants. In addition to those standard letters and notifications, we also offer other optional services, such as we can also add and delete employees, COBRA participants, directly with your insurance carriers if you'd like for us to do so. And also, we can also send out open enrollment packets to current COBRA participants on your behalf. If you're currently administering COBRA in-house, BASIC can also take over the administration of any current COBRA participants. So even if they're already on COBRA, we'd be happy to assist you with that. Another one of the comments that I hear most often from employers is the difficulty of managing the COBRA deadlines, such as the time frames that employees have to elect COBRA, the grace periods, and of course payment deadlines. And BASIC will handle this on your behalf. Plus, you, the employer, will have 24/7 access to our COBRA dashboard so that you may also review this information at any time. You are also able to print reports from our portal, and BASIC also has available to our employers tools such as those that want to send data files to us. And of course, you can also do online entry for new hires and qualifying events. You can also view on the dashboard, you can also view real-time access to the elections, the terminations, and any payments that the employees have made. If our client has a COBRA and HRAs with BASIC, we will also assist with the HRA premium calculations. We also have a participant portal for those employees that are on COBRA where they can log on and view, for example, they want to see if their payment has been posted, they can go ahead and log on and see that. Also, I'm pleased to inform you, for those of you that are in Arizona or for agents or brokers that have clients in the state, we are now administering Arizona State Continuation Coverage, also known as Mini COBRA. And same as the federal COBRA, we'll go ahead and send out the required notices, we'll build employees, we'll collect the premiums. And like I said, nice thing is employers can just direct employees to call our 800 number. You're not having to deal with all these COBRA participants or qualifiers. You can just direct them to call BASIC. So if you're looking to outsource your COBRA administration, please consider partnering with BASIC. Let me just go ahead and move it to the, let me see if I can change my screen here. Kind of froze on me, sorry about that.
That's okay.
And just change over to the contact information page. Yeah, so like I said, please consider partnering with us, and you wish to receive a proposal or you want to speak with one of our regional sales directors, please call us at 1-888-602-2742, or you can email us at sales@basiconline.com, and one of us will be happy to send you a proposal or review our process or just answer any questions that you may have. Again, thank you so much, and thanks, Anna. Back to you.
Thank you, Gloria. Yeah, and today you can go ahead and use that survey because then you've already entered your information, your contact information, and number of employees and stuff like that. So that's really the fastest way to get a proposal if you're looking for one really quickly. Thank you, everybody, for joining us today. The next webinar, when is the next webinar? The next webinar is coming right up, and I'm going to look. I should know this off the top of my head, and I don't. We did a demo on our FMLA system last week. If you want to watch that, you can do that in the library. The next one, oh, I should remember this. Okay, so the next one is on marijuana in the workplace. We actually got a lot of requests to do a webinar on marijuana and how to handle that with employees, especially in states that have recently legalized recreational marijuana. So I do believe that webinar is going to be really highly attended. If you want to attend, I would register sooner rather than later. If the attendance gets too high, I'll eventually have to turn off the registration. We also have another FMLA webinar coming up that's educational in June. We have a demonstration of our ERISA Essentials and HR Assist Lite in May, which is just a really short 30-minute webinar. That one's not for CE credits, but it does give you some insight into our ERISA Essentials program. That's all I have for today. Everybody have a fantastic day, and I hope to see you on our next webinar.